Welcome to this IG investment interview. Now today we're talking EVs and perhaps more crucially the charging infrastructure behind this booming industry. Konrad Sippel is head of research at Solactive, a provider of stock market indices. Now Solactive provides the index for HANetf's electric vehicle charging infrastructure ETF. Thank you so much for joining us. Now Konrad, I want to start off with this data point, which is really cool. 1 in 10 cars currently being sold is electric. Have you seen this data point?
Yep, that's in the UK, right? I mean, I've seen much better numbers than that. So I would say, is it cool or is it too low? Yeah, so given that we're all working towards a net zero future, that by 2035 we're going to stop selling fossil fuel-based vehicles.
Well, that depends on the infrastructure, right? Do we have enough infrastructure, charging points and the like to support this growth?
No. So, and that's kind of why we're here. So we think that the expansion of the EV charging infrastructure is like a key puzzle piece in making that electric revolution work. So take that 10% number. Right now, I don't have the exact UK number, but it should be about 4 to 5% of vehicles on the roads are electric. There's an EU study a few years ago that said that you need about 1 charging point for every 10 electric vehicles. And we're well below that, and I'm sure you've probably seen some of the headlines over Christmas with EV drivers queuing, and that's actually that happens on peak times. So at the moment, the infrastructure is probably just about sufficient to sustain a fleet of EVs. That's 4 to 5% of the overall market, but EVs are kind of like a luxury good right now. Most of the EVs are like expensive and cool Teslas, which are owned by an affluent set of owners that have their own driveways and they have wall boxes at home. Most of them can probably also charge at their office. So charging is less of an issue. But now you mentioned 10%, right? So as we have 10% new vehicle registrations, that number is going to go up. But think about 2040 when for 5 years no non-electric vehicle would have been sold. We're going to go up to something like 50-60% of EVs on the road. And that's going to be everybody. So people who park on the streets, and where are they going to charge? So we need a massive expansion of the charging infrastructure.
What's being done, Konrad, about the speed of charging as well? Because if we have enough charging points, it's really about how fast can I charge my car, right? Yeah,
so it's a mix. So you need enough fast charging points. And if you look at some of the statistics about how many charging points already exist today, which is a ridiculously low number, a lot of them are 11 or 22 kilowatt hour charges, where with the sort of medium to top range EV, you would be charging 6 to 8 hours to get your battery back to full. What we need is 150 kilowatt, 350 kilowatt chargers that can get the battery of a car from 20 to 80% in a matter of 5 to 10 minutes. And that's the infrastructure that really needs to be built out. It needs to be along the highways so that we can comfortably get on an EV. And ultimately, if you get into your petrol-based car today, you don't think about refueling, right? Even if your tank is only 20% full and you want to go all the way to Scotland, you don't worry about that. You just get in, you drive, and when the car says, "Oh, I need refueling," you just stop and refuel. If you own an EV and you only have 20% of battery left and you want to get to Scotland, first thing you do is you research all the charging stations and you hope that they work. So, the whole feeling of it needs to change if the EV is going to be the mainstay rather than the exception on the roads.
So when is the tipping point? When are we going to get to that point where you don't have to plan your journey according to the charging points?
So I think, unfortunately, that is still quite far away. I mean,
is
I think
it 5 years, 10 years? What are we looking at?
So I think, the sales bans kick in 2035. If you look at countries where that sales ban is 5 years in advance, like the Netherlands, where there's already a much better charging infrastructure. I mean, drive along a Dutch motorway and you'll see charging station after charging station, just like you used to see in gas stations. So it's really mind-blowing how far they are in there. And they're 5 years ahead of us. So I'm thinking that it's probably going to be around 2025 or so that we're really going to see a massive expansion. But what I also think is that it's really important that all the policymakers and all the decision makers that want to drive an electric revolution look beyond just giving sales incentives for buying EVs and really start getting into the game of getting charging stations done. And what I mean by that is if you read the news, you'll occasionally see this, oh, fantastic, supermarket chain A is putting 500 chargers in their parking lots, and city council B has decided to install 500 chargers across the whole town. We're probably going to need hundreds of thousands of chargers in the UK alone. And I don't really see anybody coming out and saying, hey, I'm going to build 50,000 chargers in the south of England.
Right.
And you know, it's those sort of size of projects we need to start tackling now, so that by 2025, 2030, we have the infrastructure in place to sustain all the cars that are coming.
So the horse before the cart, really.
Right, yeah, but you know, on the car side, the transformation has begun. All the car makers have really locked in onto the electric vehicle. I mean, if you take Volvo, I mean, they will not sell a non-electric vehicle after 2030. And a lot of the other car makers are planning to sell mostly electric vehicles. So to some extent, the car making industry has run ahead. And you know, there's potentially a rude awakening if all these cars get rolled out and there's no charging infrastructure.
Let's broaden it out now, Konrad, to other jurisdictions, other countries, other governments, which have done better or worse on building out this EV infrastructure.
So interestingly, one market that's been really good is China.
Yes, that's to support their hope to be the first, the top EV maker in the world.
Right. I mean, there's that. There's also way more government action with regards to building charging infrastructure. So that's a big point. And I think what we're seeing in the rest of the world is it's mostly left to the private sector, and it's kind of governments sort of dishing out few incentives, like the Biden infrastructure package does contain a substantial amount of money to be invested into electric vehicle infrastructure. But the sort of apart from making those commitments to actual execution, I still see a lot of room for improvement there. And this is kind of why we're talking about an electric vehicle charging infrastructure index here, is that there is actually already quite a number of companies, private companies, essentially stock listed companies, that are basically driving the expansion of that infrastructure. And that will, of course, benefit from increased EV adoption and more public charging sessions.
And speaking of the index and the infrastructure theme, just want to bring our viewers' attention to this chart here, which is the electric vehicle charging infrastructure ETF. As you can see here, highs of 699 and also 701 here. This is, of course, the sterling chart, and we're looking at about 377.88 there. Can you talk us through how you're linked with this ETF, how investors can gain exposure to this space?
Right. So, I mean, this is kind of what we do at Solactive. We try to find futuristic themes, potential growth themes that can be invested using kind of, investing in regular stocks. And rather than having to stock pick, if you use a passive vehicle, in this case an ETF, basically allows an investor to gain exposure to a theme without having to buy the individual stocks and without having to rebalance and follow the kind of news, new entrants, and so on a permanent basis. So we try to look for themes where we believe there's a certain amount of growth potential. At the same time, there's enough listed companies that are actually active in that theme, and then we package them together in an index. And then we work with a partner. In this case, it's HANetf, who will actually create an investment fund which people can ultimately buy. But what we see here is we sort of see a strong underlying fundamental, in a sense of that the electric revolution is more or less put into the law books with those sales bans coming up, so we know that we're going to go from 4% electric vehicles to 50% plus. We know that those vehicles are going to have to charge. So we kind of know that the number of charging sessions, which is kind of the typical KPI how these companies make money, is going to go up exponentially between now and 2035, 2040. So and here's an opportunity to invest into some of the stocks that are in that industry and may benefit from that growth.
Now, this index is still very concentrated, right? 12 holdings. Why is that?
Well, it's simply there's a lack of pure play companies that are big enough. I mean, you know, when we build indices, given that it needs to be investable, there are certain constraints in there that the company has to have a certain size and a minimum stock exchange turnover. Otherwise, you end up being in very tiny micro caps. And if, you know, sufficient volume comes together, that can be problematic. So there is more companies in this space, but those 12 are basically the ones that are kind of big enough to sustain an ETF. And it's a niche theme. I mean, you basically, you know, this isn't a general tech theme, even though it has sort of performed pretty much in line with the decline of general tech in the last year. It's one that really accumulates the idea of investing in a very specific growth theme, you know, that has its very specific risks, but it has very little overlap with other tech indices. It's really concentrated on the theme of EV charging infrastructure.
Right, and then last question, Konrad, if investors and traders watching this wanted to get exposure to this space, what are the pros and cons of going with the, you know, thematic versus, you know, pure play? I guess higher risk, right? But bigger return potentially if they went for these small stocks instead of going for indices or an ETF.
So the perennial question of risk and return, right? So yes, you have a more narrow theme basket that's very much tied to one growth story that we at Solactive like, but it's down to every single individual investor to kind of look at the numbers and make a decision for themselves on whether they buy into that or not. And then yes, I mean, if you buy a very broad automotive themed basket, or you look at tech in general, I mean, you're going to be exposed to a lot of different trends. If you go with 12 pure play companies that are in the EV charging space, you're gonna be tied to the performance of that particular sector, which comes back to your original research as to say, do I believe in that story or do I not believe in that story? And you know, that gives you a more direct exposure to that. But yes, it's definitely more high risk than if you went with a broader basket.
Right, thank you very much. That was Konrad Sippel, Head of Research at Solactive, provider of stock market indices, and they provide the index for HANetf's electric vehicle charging infrastructure ETF. This is IG.